Welcome to The Explainer. Today, we're diving into something that is, without a doubt, the absolute cornerstone of technical analysis, support, and resistance. Look, if you've ever stared at a price chart and just seen a confusing mess of squiggly lines, this explainer is for you. This is the key to turning that chaos into a clear map of opportunities. Our source material calls it this for a very good reason. You really can't build a solid trading strategy without understanding this. It's kind of like trying to read a story without knowing the alphabet first. It's that fundamental. So, what are we actually talking about here? Well, you can think of them as historical battlegrounds between buyers and sellers. These aren't just random lines on a screen. They form because of market psychology, a sort of collective memory of past price points where big moves happened. These past battles leave behind some really powerful clues on the chart for us to find. Okay, so here's our game plan for today. First, we'll talk about why these levels are so foundational. Then, we'll get into how to actually read the price map to find them. After that, we'll look at how to turn this knowledge into a real trading strategy. Then, we'll cover 3 essential rules for success. And finally, we'll wrap it all up with a real-time example. Alright, let's just dive right into section 1. Why should we spend our time identifying these levels? What's the big deal? The payoff is actually pretty simple. It gives you clarity. By marking these levels on your chart, you turn that chaotic price action into a map. You're no longer just reacting to random noise. You're starting to anticipate where the price is likely to turn. And that, right there, gives you a massive edge. So, if these levels are the key landmarks on our map, how do we actually find them when we're staring at a blank chart? Well, it's probably more straightforward than you might think. So first up is resistance. Just picture an invisible ceiling floating above the current price. When an uptrend hits this level, sellers tend to jump in, and the price often struggles to break through. It gets rejected, and a lot of the time it reverses downwards. It's basically a barrier keeping prices from just shooting up forever. And you guessed it, on the flip side, we have support. This is like a price floor. When a downtrend comes crashing down to this level, buyers start to see it as a bargain. They step in, and the price often stops falling and bounces back up. It's a floor that literally supports the price and stops it from dropping further. And here's the best part. Finding these levels is actually pretty simple. You just scan the chart, look for the past peaks and valleys, connect those peaks, boom, that's your resistance. Connect the valleys, and that's your support. And here's a pro tip. The more times a level has been tested, the stronger and more important it is.